SMCI. Now, SMCI, I got to show you this, guys, because this was one of the most ridiculous daily charts that I have ever seen. All right, this stock, Super Micro Computer, started out in May at basically $100. It topped out going into earnings at basically $350 to $360. The stock, again, insane move up, $100 to $360 in a couple months, and this was going into earnings. Now, this is the thought process. When a stock runs up into earnings like this, and they have, like, say, their analyst estimates, what this is doing is, let's say their estimates were here, okay? When a stock runs up this much, even if the whisper number, meaning what people really think they're going to do, is up here, the run up in the stock means they have to come in up here just to continue that momentum. It makes it extremely hard for a company to beat earnings, or at least go up on earnings. Beating earnings is no big deal, but to continue up after such a move, it's almost impossible because the stock has gone up way too much. And that's what happened here, folks. So just going into this, if we go to the 10-minute chart, look at that drop on earnings, a massive collapse. We've now, in the overnight into today, we've kind of settled into this 294-ish level. In terms of a trade level, this is tricky because the stock is so overbought, but I do see this pivot right here. Remember, we just talked about pivots, and if we go back to this point here, up, down, that's a pivot. So right now, 265. So really, again, that's about 10% more to the downside on a stock, by the way, that's up 300-400% in the last few months. Not that big of an ask to see it come back down. That would be where I would potentially go long. Please know this is not a huge company. I think it's about a $20-25 billion company. So it's not a huge company, and it's not hugely liquid. So you have to be very careful. Obviously, you guys make all your decisions yourself. I'm just here to give you guys information.